Welcome to The Tax Factor, the UK's top tax podcast from Blick Rothenberg, the tax, accounting and business advisory firm. This week with Heather Self and Sarah Stenton.
Welcome to The Tax Factor. I'm Heather Self, back for another edition of the UK's top tax podcast, and I'm delighted to be joined by a new contributor to The Tax Factor, Sarah Stenton. Welcome, Sarah.
Thanks, Heather, and thank you for having me.
This is our 80th episode. It just so happens that 2025 also marks Blick Rothenberg's 80th anniversary year. Now, I'm quite old, but I don't quite go back to 1945, but Blick Rothenberg has been around through some of the biggest shifts in the UK's tax landscape. What did personal tax look like 80 years ago? Well, the country was emerging from war. Income tax had skyrocketed during World War II to a basic rate of 50% and a top marginal rate of 97.5%. And just before that year ended, major innovation landed. PAYE, pay as you earn, had just been introduced, revolutionising tax collection by deducting income tax directly from wages, making it easier for the government to collect revenue and harder for taxpayers to avoid it. However, we didn't have any capital gains tax and we had no corporation tax. Both of those came in 1965. Anyway, if the tax factor had existed in 1945, we'd probably have been debating things like reconstruction budgets, surtax thresholds, and whether pay as you earn was here to stay. It was. Fast forward 80 years, the tax landscape has changed dramatically, but the questions and the politics are just as lively. So let's get going, Sarah. I think we've got another anniversary this year, haven't we?
Yes, so 2025 marks a big anniversary for HMRC. It's 20 years since the creation of HM Revenue and Customs, which saw the merger of the Revenue and Customs, making it the largest department at the time. In fact, I actually worked there in 2005, back in what everyone seems to call the good old days of the inland revenue, when we used to have inquiry centres and the general public could come in and see their local officer.
Funnily enough, I was chairing a panel on this very topic just a couple of weeks ago for the ICAW and CIOT, and we were looking back on 20 years of HMRC, and one thing I suggested was having drop-in tax centres. And in fact, on the Tax Factor a couple of weeks ago, we mentioned that Guernsey have got just that idea. So what goes around comes around, I think they say. HMRC has been in the news again for its performance issues. We keep complaining about how difficult it is to get them to answer the phone, but the ICAW have noticed that their service performance fell in January 2025. To some extent, that's to be expected because that's when everybody's doing their tax returns at the last minute. But the performance didn't recover as expected in February. The most common issues being raised by ICAW members include long waiting times on the phone, there's a surprise, calls being cut off, delays to repayments, that's particularly irritating if you know you've overpaid tax and you want it back, and also delays to processing of claims. So HMRC might be 20 years old, but it's still got some issues. And some of the things they're doing seem to be a bit of a waste of their time, don't they, Sarah?
They do. One case that hit the news this week is a case where HMRC chase a Canadian taxpayer for £600 in late filing penalties. I think it's fair to say it's a case that makes us all sigh. I mean, seriously, do HMRC have anything better to do? The problem being that HMRC is not, as we know, a commercial organisation. So there's a general fairness to other taxpayers in collecting amounts that they perceive to be due. But it does beg the question, do HMRC have anything better to do then? Take a case to tribunal for £600 worth of penalties.
It is difficult because there used to be something called extra statutory concessions where HMRC could exercise their discretion a lot more, but they were basically abolished following a tax case called Willoughby. And I think personally, I'd like to see them getting a bit of discretion and perhaps common sense back again. Perhaps now they've got a minister chairing HMRC's board, that might help. There have been a few rather more significant tax cases recently. I think you spotted one with a winding up petition for Holly Willoughby's agency.
I did, and we all know Holly Willoughby is not a stranger to headlines, but this time it's for tax, a company that she set up with her producer husband. HMRC issued a winding up petition early this year with a hearing date set for April. Holly Willoughby didn't turn up for the High Court hearing, although the court has now heard that the outstanding tax has now been paid. So the case at the High Court was adjourned and is set to recommence on the 12th of July this year, but HMRC filed a winding up petition for tax owed by the company in excess of £300,000. We understand that £300,000 has now been paid. So The question is, will the High Court hearing recommence later this year? Probably not.
Does show that ignoring letters from HMRC or HMRC telling you they're going to take you to a court, not a good idea just to ignore it. I really like the other case that you found, though, about the fake Greggs manager, though. I mean, how on earth do you get a fake Greggs manager?
Well, perhaps he just really liked Greggs. This is an example of an individual who claimed to be area manager for Greggs the Bakers, claimed COVID support funds of more than £700,000 during the pandemic. Last week, he was sentenced to 4 years imprisonment, which is a pretty high sentence for COVID-related fraud. In handing down the judgment, the CPS noted that this particular individual took advantage of difficult circumstances of the pandemic, which I think reflects the 4-year imprisonment that he got.
There's got to be a joke somewhere about Greggs and porridge, but I can't think what it is. I don't know whether they do porridge. Lots of sausage rolls, but not sure about the porridge. There was one more case that I spotted, which was on the question of VAT supply chain fraud. Now, this has been a problem for HMRC for a number of years. It used to be mobile phones, and then it moved to computer chips, and then it moved to other things. And broadly, somebody buys something with VAT on it, sells it on to somebody else, reclaims the money on the purchase and doesn't cough up the VAT on the sale. And these goods would go round in circles. It was known as carousel fraud. But a recent case was a business which actually had a very good record of complying with VAT, but they had a rogue contractor who carried out this sort of fraud, was found out. HMRC spotted something not quite right in a number of their VAT returns. The company said, well, it was just a rogue contractor. It wasn't us. He wasn't a director. He wasn't even an employee of the company. But it was held that the company was still liable on the basis that they should have known that these transactions were fraudulent. And I think that's a warning that even if you're a reputable business and you're doing everything you can still potentially be in the firing line. And that's relevant, I think, in other areas as well, Sarah, isn't it? This failure to prevent the facilitation of tax evasion.
Exactly. I think this case is particularly harsh and a bit of a double whammy, really, because not only have the company failed on the VAT side, but they also failed to opt out of the cost regime. So not only losing the case, but they also have to pay HMRC's costs for the hearing itself.
Ouch. And I think that the lesson from that is making sure that you've got reasonable processes in place so that you've done everything you can to prevent other people carrying out any sort of tax fraud. One of the reliefs from tax which is available is film relief. And another bit in the news recently was about film tax relief. Now, film tax relief is great. If you spend a certain proportion of your costs in the UK on producing a film, you can claim film tax relief. And apparently that's done a lot to incentivise the film industry in the UK. But I was a bit surprised to see that Jurassic World films, which are some of the most expensive films ever made, they've had over £150 million of tax relief towards their costs of making those films. And okay, it's great that we're getting more films being made in the UK, but when times are hard and finances are very tight, I think you have to question whether this is the best use of government money to be giving such large sums to companies which are probably making enough profits anyway.
There's a public perception point here as well, because big corporations getting tax breaks is always going to be particularly contentious. So I think it's a case of striking the right balance.
Absolutely. One suggestion that I saw this week was from Ofgem, who are the electricity regulator, that high earners should pay more for their electricity. What could possibly go wrong with that, Sarah?
I mean, it's just another tax, isn't it? Another tax on high earners. I saw that there's not a definition of high earners, but it's likely to mirror HMRC's definition of high earners. But isn't it just another tax?
Well, the other thing is, if you're going to charge wealthier people more for their electricity, what else are you going to charge them more for? More for their tea bags? More for their toilet paper? You really need to separate the idea of taxes on income and VAT, which should apply to everybody, and then giving reliefs or benefits to people who need them in another way. Please don't mix up the tax system and the regulatory system.
Exactly. And there's a further practicality point as to how this will be enforced, how it will be regulated, how it will be rolled out.
Yeah, they'd need an awful lot of information from HMRC. Can you just imagine a builder who happens to have a very good year and is classed as a high earner, but then he's made redundant or his contractor goes bust and he loses his job? Are they suddenly going to get a refund on the electricity bill? I really think that we need to separate tax from other things. One not really related story, but just a little bit of good news that you spotted on breakfast clubs, I think, Sarah. Not quite tax, but something which is probably of more interest than Jurassic World to many people.
Yes, it's some good news out there for parents. This week saw the launch of free breakfast clubs in England across 750 schools. It's a pilot scheme at present, expected to be rolled out across all primary schools in England, and it forms part of Labour's plan for change, which is setting ambitious milestones over the next 5 years to get people back into the workplace, help people stay in work, help people progress in their jobs, and at the same time tackling child hunger and wider poverty and inequality. So yes, some very welcome news for parents and much needed. As a mum of 2 young children myself, it's very reassuring to see such measures being introduced finally.
Well, it's nice to finish on a bit of good news.
The Tax Factor from Blick Rothenberg.
That's it for our 80th episode. As we look back over 80 years of tax, we can't help wonder what the next 80 might hold. Will HMRC be abolished and we'll just have robots calculating all our tax? Or are we going to tax the robots themselves? Perhaps we'll be filing returns via voice assistant while our autonomous car drives us to a tax-free retirement village on the moon. Anyway, Sarah, I hope you've enjoyed your Tax Factor experience and I look forward to welcoming you back soon.
Thanks, Heather. And I guess whatever the future holds, one thing's for sure, tax will always be with us.
I think you could be right there. Thanks for listening, and don't miss next week's episode where John Bull and Ellie Theo-Chari will be in the hot seat on the Tax Factor.
That's the Tax Factor. If you enjoyed the Tax Factor, please like, share and subscribe. Join us again next time on the UK's top tax podcast, The Tax Factor. The Tax Factor is a Blick Rothenberg production. Copyright 2025.